The last week of September is officially upon us, and man oh man do I have arguably one of the biggest portfolio updates for you in terms of this past week's investment moves. So today, I want to go ahead and share with you what exactly I did in terms of consolidating the buys of the week and how my entire portfolio allocation has now shifted. With that, are you ready? Now, as far as I'm concerned, it is always about putting your money where your mouth is and leading by example. And if you've been following my journey for some time now, you know that I've been sharing almost all year long that I've been in a process of trimming my portfolio down to ultimately get to just 2 ETFs for an investment foundation with roughly 7 to 10 high conviction stocks stacked on top. Now, this week, I made a major stride in achieving just that. But this week was also huge for all of us after the Federal Reserve went ahead to chop interest rates down, and not by the expected 25 basis points, but rather an entire 50, which sent the market to some all-time highs following the big announcement. And of course, every one of us benefited. So clicking into Gitcoin, my portfolio tracker, which by the way comes highly recommended if you're not using any portfolio tracker as of this moment, but we can see that the whole week, and especially after the confirmed rate cut news, we were in the green. And now my portfolio is sitting at $209,732.35. Which is up by about $4,000 from this time last week. Now, I want to jump back on screen with all of you before we go any deeper into this deep dive and say I personally believe that this is just the very beginning of a much larger bull run as interest rates will continue to come down, which is going to spur a lot of spending. But if you're interested in more macros, be sure you're subscribed to the channel and joining me every single Sunday for macro news bites, as well as updates and, of course, dividend stock ideas to have on your radar. Now, the next big announcement, at least on my end, is the fact that I finally went ahead to do some consolidation work on my portfolio, thus booting my initial investment foundation with Vanguard's total stock market index fund Admiral shares that goes by the ticker VTSAX to ultimately shift gears and put all of that money into Vanguard's S&P fund ticker symbol VOO. And now we're going to see the revolution that has sparked within my portfolio in just a second, but I wanted to explain the method behind my madness here before we move on. So in short, VTSAX plays the entire stock market, whereas a single share is going to gift you exposure to over 4,000 stocks all in one basket. And of course, it's a great basket to invest into and just hold on to for the long haul. After all, it was my first choice and it has remained with me since, well, this past week. But then there's the S&P 500 fund with VOO, which solely focuses on the 500 largest companies in the United States and has been just an absolute powerhouse. After all, everyone from Dalio to Buffett and Munger always share to literally just invest into the S&P if nothing else. But here's what really got me moving on this swap before the Fed rate cuts. If we jump into the charts on Google to review the performance of both of these funds, we can see that VTSAX actually performed very well this year, and how could it not, betting on the entire market? But in simply comparing it to VOO in yellow there, we can actually see that VOO ultimately performs by 3.5% better than VTSAX. And clicking to the 5-year view, that difference in terms of appreciation jumps, whereas VTSAX delivers through on 82% worth of growth, while VOO tops 91%. But now at the max view, we can see a whopping 75% gap between the two funds, with VOO ultimately trumping VTSAX. Now, that may not seem like a whole lot, but it actually works out to a hefty sum, with a $10,000 investment into VTSAX 10 years ago turning into $31,915, whereas with VOO, it would pop up to $33,762, to which I am ultimately here to tell you that every penny counts on the financial freedom journey, let alone an extra $2,000 or so. But now I want to jump back into Gitcoin with you and dive into how this has actually changed my entire portfolio. So we can go over to the right-hand side here and click on Show More to enlarge the portfolio, and can see that I no longer hold a mutual fund there, which was VTSAX, meaning I am still stock heavy with roughly 47.8% of my portfolio in stocks, but now we have 42.8% of the portfolio in ETFs, and still remaining a sizable cash position there at 9.3% of my portfolio, coming in just under $20,000, which this upcoming week, of course, that's going to pop back up above 20K. Now, sector-wise, not the biggest overall change with the S&P maneuver, as I'm still tech heavy with 48.9% of my portfolio in tech, before tapping into healthcare at 11.7% of my portfolio, another 10.6% invested into consumer discretionary, followed by other industrials, financials, and all the alike. But this is where, at least for me, it gets interesting. If we click on the positions tab, we're now going to see that Vanguard's VOO, that S&P fund, has officially become the largest position within my portfolio, coming in at over $41,500, equating to about 19.7% of my portfolio. However, we still have Apple coming in at 12.8% of my portfolio, followed by Vanguard's total stock market index fund, ticker symbol VTI, which is actually the next ETF that's going to be booted out, but currently making up 11.7% of my portfolio. Before we find Vanguard's tech ETF VGT, followed by Alphabet at just over $20,000, equating to almost 10% of my portfolio, followed by my cash position, then Johnson & Johnson, which is almost $17,000 worth of my portfolio, followed by Realty Income, Visa, Lockheed, and slivers of other dividend and growth stocks as well. Now, clicking back to the top of the homepage here, what do you know? You can actually see in real time on Gitcoin the movements of a portfolio. Mine just popped above $210,000, but scroll down with me to the dividend section, and we're actually going to see what dividends have hit my account earlier this month. From McDonald's to Alphabet, Realty Income to Johnson & Johnson, this month will ultimately come in quite strong in terms of dividends, upwards of over $300 collected after I get ETF distributions, as well as the distributions from just having money in my settlement fund. So be sure you're actually staying tuned for those updates at the end of the month. Now I'm going to jump back on with all of you to finally get to what exactly I bought this past week. And I'm going to be honest, it wasn't a whole lot, but nonetheless, it costed me over $1,000 after I went ahead to score more shares worth of Vanguard's Information Technology Fund, ticker symbol VGT, which, as I mentioned, is the second ETF that I'm going to be scaling in my portfolio, but it has remained a powerhouse for me in terms of growth, given its tech orientation, which is just our future. But just to give you a taste of what this fund is all about, we'll jump in here to Vanguard's website for a sector breakdown, and that all works out to semiconductors coming in at 28.9% of the fund's weight, 19.9% in terms of system software, 18.1% in technology, hardware before tapping into application software and semiconductor materials at 14.9% and 4% respectively. That works out to Apple and Nvidia as the top two stocks, followed by Microsoft, Broadcom, Adobe, Salesforce, Advanced Micro Devices, Oracle, Accenture, and Cisco Systems. So all industry titans, and given I'm just 30 years old with plenty of time to spare in the market, I am in this fund for total return more than anything, though it does pay a sliver of a dividend coming in at 0.53%. But all that aside, I went ahead to purchase 2 more shares worth of VGT for a total of $1,129.36, which aside from the big consolidation was all I actually did this past week, but expect more from me next week and of course another round of consolidation. Till then, I want to know what the heck you've been up to with all the interest rate cut hype and excitement out there. Have you been buying, selling the news, or simply holding tight for certain opportunities? Let me know, as well as the community down in the comments below. And of course, if you're not already subscribed, do so now before clicking right here for more insights now.